the basics right in terms of processes, policies, attracting the right talent and leaders also to join us. And me and my team, we all believe that we are professional entrepreneurs who have joined together to build this company together. And we have these parallel tracks running. One is internally we call it the run, grow, and build. But from a very simple market perspective, whatever services we inherited, we are trying to make it better by running it more optimally, driving excellence in that. And grow is something which we are building new lines of services, want to be on parity with other services companies in digital business. And build is where we're investing in the future, where we are building new IPs, new technologies. For example, we are building our, with IIT Madras, we are building the 5G lab as a service. Edge computing is being built there. We have invested in Oracle COE, seen our COE started off in Chinnavelli, deep down south, and in Tier 3 is an experiment. We are looking at how to overcome this huge resource crunch as well in line with our strategies. And so that's where we are, and slowly and steadily we are now trying to see how we could get this engine running and get our the cost optimization is there, because post any carve out, we are left with residual and legacy costs, which we have been eliminating, and we've also been kind of proactively cleaning up our books as well to kind of build a more stronger foundation and create a more predictable business. And that's where we are today. Maybe I'll pause and then I'll probably take questions, and then we can keep it interactive.
So whoever would like to ask a question could raise their virtual hand so that I can take you in for the call. Dheeraj sir, would you want to ask a question? Dheeraj sir?
Yeah, let me just come back. Just give me 5 minutes.
Sure, sir, no worries. Digant sir, would you like to proceed with some questions?
Not really. If there's anything, I'll just come back.
Okay. And Kshitij, would you like to ask some question?
Yes, hi. Sorry, it's just with the caveat that I don't know much about the company at this point. But yeah, just to start off, the application, the automation and analytics business unit, could you throw some light on what we are doing there and what the plan is? And where I'm coming from is in general with the newer age technologies, as opposed to, let's say, the IMS, uh, which is the other space. There is some more pricing power on the digital side. Uh, we've also seen the ERD companies, the engineering, research, and development companies have more pricing power. So, on the spectrum between IMS and ERD on the other side, where does application automation and analytics stand in terms of pricing power, and how do you see this space?
Great question, sir. Great question. And also it probably, I'll probably try and put things in perspective as well, so that, see, we have the classic business. Classic business is your old school infrastructure management, which is your managed data centers. We have field service management. We have, it's all on the infrastructure side and on on-premise kind of business, which is your old school business. It has huge revenues for us today. Then we have now started the cloud first division. The cloud first is everything. We're talking about cloud natives. We talk about cloud transformation, ability to have cloud in a box. All this is the second aspect of, the next level of IMS. And cloud first and IMS work together has a kind of, two in a box, because if you look at, and I'll try and put a perspective of why we also over invested in Oracle COE, and then I'll come back to your AAA question very specifically. The reason we wanted to invest in Oracle also is that, if you look at it, any IT company will invest in Amazon, Azure or Google. It's a no-brainer. Everybody will have a practice around it. You do that. So when we are rebuilding this company, we wanted to be a challenger. So we want to invest in Oracle. The reason is the captive legacy base of Oracle is so huge. If you look at it, they got almost 33,000 customers who are still yet to be migrated to the cloud. It's a phenomenal opportunity for a company like 3i. So we said we'll over-invest in Oracle, not just in the OCI on the cloud, but horizontally also. So which is on the application space, the analytics space, the automation space, all the 3 A's as you rightly articulated. So Oracle COE is a horizontal in my mind, where we are investing in not only migration to the cloud, performance testing, application COEs, automation COEs on Apex, all this is happening horizontally, right? And this is also now slowly helping us position us better and create opportunities within the Oracle world itself. It's a massive opportunity for us. If you look at the size of market which is available for us, and super specialization really helps us both in the principle like Oracle also supporting us, and also we are able to build it. Now, AAA, if you look at it very specifically, sort of what we're doing is entire digital business landscape, right from whether it's UI UX transformation, to that. The 3 A's stand for application, automation, and analytics, just to keep it simple. Now, automation is where we are focusing on coexisting with core systems. It could be anything. Say, for example, in banking, we are building automation layers on, say, Finacle, on TCS banks, things like that, because this is a real problem in the market. So we are focusing on trying to do that. Now, automation could be in any low code, no code, right? We are also now specializing on Oracle Apex, which is a very powerful capability because that gives us the opportunity to coexist with Oracle ERPs or Oracle HCM businesses. So that's on the automation space. Application is predominantly we're focusing on digital transformation, right? And analytics is very clearly on. So we've got 2 divisions, Sharaf. One is the AAA division, and we also have the cognitive computing services, which is the IIT Madras Tech Park. The clear differentiation in the analytics here is the normal, what do I say, till the level like descriptive to predictive analytics stays with AAA, but more towards cognitive computing, which is deep AI, deep learning, which gets into more prescriptive to next best action, edge analytics, all that good stuff happens out of a cognitive computing division. To your point, I think that gives us the kind of differentiation as well. And from a pricing positioning perspective, to your question very specifically, which you spoke about ability to price, we are also trying to figure out how we can come about with not just like a pure play technology company, which just talks about technology, but how do you bring convergence of business process optimization and a bit of industrial orientation as well. So this human-humanoid coexistence also happens in AAA, right? Whether it is a digital embedment into a business process, or we call it cognitive insight, if you look at it. So any business process has a cognitive component, which is there within that. So that is where we are now trying to figure out how to, maybe, what do I say, a bit of innovation on the commercial model. It's a risk, but we'll have to probably price it on outcomes rather than outputs. So the contracts are also moving more from outputs to outcome. Of course, it's moved away from FTEs and time and material. We have to move to more outputs and outcomes. So outcomes, obviously, it cuts both ways, but it also gives us the opportunity to enhance our margins as well, Sharaf.
Thank you. That's very helpful. And since you mentioned Oracle, just wanted to get a sense of your peers in the space. So with the likes of Mastech and other companies with multiple divisions, Mastech because it has a large focus. So who would be your peers, Mastech and any other?
See, for us, Sharaf, the way we look at it, if you look at it, from a industry IT services perspective, if you look at it, at least I would want to keep it at a benchmark level is somewhere in the grow side. I'll try and answer it in 2 parts, the grow and the build side. grow, we have to compete in the market, and right from any tier two, from an Exaware to Brulasoft to Happiest Minds. Personally, if you ask me, my role model is Happiest Minds. As a benchmark. Mr. Shruta is a great leader, and for me, it's a benchmark. To be very honest, if we can get there from a financial goal perspective, I think we'll be very, very happy about it. But on a specific Oracle question, Sharaf, what we would say is we are trying to be very unique. I'll tell you the reason I'm saying we are being unique. I'll tell you why. Because we are the only folks who have kind of very openly gone and said we lead with Oracle. Nobody's doing that. So what happens is that even we get preferential treatment with Oracle, right? So if you look at it, we are the only cross-sell, upsell partner in entire APAC along with Wipro. So that's a big opportunity for us because we are betting heavily on it. Next week, if you look at our media releases, we are releasing our first sovereign cloud in Malaysia, which is an Oracle cloud, which is an Oracle-powered cloud. It's branded by Nure 3i Plus, which is our branding. It's an Oracle-powered cloud. We are launching it. It's the first sovereign cloud in Malaysia. It's a first test bed. And similarly, we want to create these sovereign clouds across the world, actually. So this is a very unique initiative, the way we look at it. So we're not just selling cloud consumption, but the cloud then brings in the PaaS layer, the DaaS layer. It could be security, it could be services, the entire works. And in fact, the Malaysian example I'll take you, for example, we're the only one who's got a three-way sign up with, say, even MDEC, Oracle, and 3i together. Launching this, and we are trying to see how to digitize the Malaysian SMB as an example. So if we are successful there, we could probably replicate it in a larger country like India as well, because India needs more deep pockets and more larger investments. But I think we can learn it in smaller countries and then replicate it.
Got it. I'll just go back in the queue, probably let the others ask the question and jump in again.
Yeah,
thank
thanks,
you.
Arif. Yeah, thank you.
Yeah, Dheeraj sir. Oh, yeah, Digan sir, you can go ahead.
Can I go ahead, Ashwin?
Yeah, sure, no problem.
Hi, sir. Thank you for the opportunity. So I just wanted to know about our deal with Azentio and where are we at with the receivables and everything?
Yeah, so Essential deal was supposed to be completed with the last financial year, but like with as any deals, we are now finally trying to conclude by H1. So we are almost done. We are on the last leg as we are speaking. Tomorrow we are closing out all the formal contractual obligations on both sides. To your question, by this Q2 we would probably formally conclude the deal. Yeah, in all aspects.
Right, and we'll be so by formally completing, you mean we'll be having our funds received by then?
Yeah, see, the only last leg of that is from a funds perspective is basically because if you look at our narratives also, we had part of the slum sale, we have some assets transferred to them because obviously these assets were apart from the IP assets, we also have physical assets in terms of infrastructure. So the real estate asset. So that's the only pending. Hopefully that will get resolved because that has dependencies beyond Ascension and 3i because we have the CITCO or the government bodies in between, as you might be aware. We are hoping that that will get concluded. And with that, we'll have nothing else left with them.
Okay, that's amazing. And so I was just going through the balance sheet that I have. The last one was, I think, March 22.
Yes.
So in that, I see the receivables are about 45 crores. No, sorry, 451 crores. And out of that, I think 62 crores is what we were supposed to receive from Azentio, right?
That's right.
So after that, what is there any other such receivable that could probably be written off in the future, or there is some bad debt kind of a thing, something that could be written off?
See, essentially, as I said, the only receivable pending with them is the real estate. See, either the assets stay with us, okay, or we get cash. That's it.
Okay.
So from a balance sheet perspective, either we'll continue to have the asset in our books or we have cash.
Okay. Okay.
And to your point also, even assuming if the asset stays with us, we will obviously, raise cash by a sale and lease agreement, because we obviously need cash.
Right. Makes sense.
So yeah, in a one-line answer to you, we'll have cash.
Right. And
Either.
sir, going ahead, would the receivables be of the same range at 400 crores odd?
No, I think, see, I'm not sure on those numbers, because see, from receivables from that deal perspective, if you look at it, I think the 400 crores was even before the preferential
That-
shares and all that, if you look at
That's
it.
right. Yeah.
Yeah, so if you net off all that, with this final leg, there'll be no more receivables from asset shows from the deal perspective.
Okay. Okay.
Yeah.
Yes, sir. Thank you. Probably that was a major concern that I had. I think I'll get back in the queue if there's something else. Thank you, sir.
Yeah. Thank you.
Yeah, I just wanted to clarify. We had this restructuring and product IP sale. So what are we left with now in terms of the products within the company post the sale?
So there is, see, the whole deal was structured in a way, if you remember, that's why in my opening comments I spoke about it. If you rewind and see, all the products and IPs were sold off part of the slum sale, which got the company 1,000 crores, and we were able to, pay off all our debts actually, right? And it became debt free. At least me and my management team inherited a debt free company. Okay. So to your question, there are no significant products were left at that point of time with us. But from that time till today, we have also started a lot of build initiatives, and we have been building a lot of new products and IPs. And as we speak, we are filing, new IPs are being created, Dheeraj. So obviously we cannot build products what we have sold to Essentio. Obviously we cannot build the same products. So we are focusing more on the edge computing space, in the 5G labs, in cloud first. So those are the areas where we are investing and developing products and IP as of now.
So given the product life cycle being elongated and you have paid off your debt, will you have a balance of migrating to a new avatar of creating products, new age products? What stage of the product life cycle completion are we to monetize it? Can you just elaborate a little more, because
Yeah,
I think
great.
the outlook and the future depends on that.
Yeah, great question. If you look at it, even if you see our P&L, and if you look at last year alone, we invested almost close to 8 crores, Dheeraj, on capitalization, where we have invested in products development beyond our traditional services business, which obviously pays our bills. And this year we continue to invest in these new products. If you look at Neuray Edge, fundamentally Neuray Edge is already in the market. It's a SaaS product. We built on the core technology of XCM. We invested in this XCM, and some stakes we picked up. We got access to the technology. We built our own unique IP on top of it. We are filing for patents there as well. So Neuray Edge is on the market right now. We got customers in that. Similarly, we are building other products in cognitive computing. 5G lab as a service, you can watch out, is the new one we are building right now. We are building on the 5G lab core, which we got from XCM. We are building this 5G lab as a service, which is going to be a very, very important product, which the company will have in at least 2 quarters from now. Our beta trials will be over in first quarter, Q3. We will have commercial launch by Q4. So that will be a very, very powerful first step forward to your point. So these are parallel track. As I explained, we are having this run, grow, and build running in parallel. Build is where we are building these new products and platforms with whatever limited cash we have. We have also brought in resident entrepreneurs. That's the new innovation we have done. So what we have done is we have brought resident entrepreneurs to join us, and we give them a separate entity, and so that we give them the freedom to continue to innovate and invent. And within our own frameworks, we just give them sweat equity. So that is the new structure we are building, Dheeraj, in parallel. And the hope is that with the seed capital we are doing today, we'll be also able to bring in capital even at the subsidiary levels also. So for the build part of the organization, because that is where the monetization will happen, and the parent 3i Infotech also will benefit out of it. So that's a strategy on the build and the product side. And in parallel, we are running a services business, which is our run and grow.
Yeah, but only thing is, when I go back to your legacy, you develop phenomenal products. Somehow, somewhere the strategy that on the execution or probably the leverage on the balance sheet did not work well, but products were great. Now in the today's world, it's an idea and it doesn't require too much of a capital. So when you're building entrepreneurs to build product, they may not be really keen on it because they may be on their own and say that, okay, I'll be in the startup world and have 100% of the equity rather than 3i giving me equity after 3 years or whatever it has been on the vested timelines. So how do you manage to retain talent, because the product engineers, etc., are now themselves entrepreneurs. So those days are not there, which used to be some many decades back when you build those products. So things have
So
changed.
no,
How
no,
do
yes,
you retain?
it's a great question, Dheeraj. I'll tell you that is why for us the hope today is that traditional product lifecycle management, I don't think 3i Infotech can afford today. Okay, it cannot. As you're spot on, it will never work. That is why we are also, because necessity is the mother of all inventions, we are also innovating all these models. I'll just expand on this resident entrepreneur model for your benefit. We are bringing resident entrepreneurs who were not successful. They tried maybe in the wrong time. So we are relaunching them in our ecosystem. That's a point number one. Okay. So they are full-time employees. The method of employment is different. We give them sweat equity, very, very clear focus in terms of quarter on quarter. We don't have any runway beyond 18 months. Okay, that's a step one. Second is we don't want to build everything bottoms up. As you rightly said, today multiple components are available. We don't reinvent all that. We build the layers on top of it, or the product layer or the platform layer on top of it, and go for a kind of a productization of it and get value and IP out of it. So that's the strategy we are now taking up also. Because going for a full bottoms up product, very limited money we'll invest in that because we cannot afford that right now. So to your point, we have cycles of 2 to 3 quarters, Dheeraj, where we can quickly get to market, test the commercial viability, and then try and see how we can go for fair valuation of these products. That's where we are going. As I'm speaking to you, 2 products have reached the stage already, Dheeraj.
Okay. So assuming 3-5 years down the line, will we call ourselves as product company, or also product plus executing, implementing third-party products as a service provider through SaaS platform or whatever it is? Cloud you mentioned initially and elaborately.
Yeah. No, absolutely. See, Dheeraj, I'll tell you, it's a fantastic question, because see, these lines are all blurring today. The lines are all blurring. Our old school boxes of being a so-called services company, a product company, a platform company, all these lines are blurring because I firmly believe, and that's where 3i is heading also, we have to be a business problem solver company. It doesn't matter how you solve a problem, right? A customer has a problem and there is a transformation which needs to happen. How you solve it is what all customers are asking now. The how factor is what it could be: productization of services, or it could be a mix of platform plus services, or a mix of product plus services, or it could be from a business process service. It doesn't matter, but everything has a component of technology, digital, cognitive, are all embedded in it. So that is where the company and the industry is moving. So we want to be an orchestrator. We want to be a problem solver. And the other favorite question also which people will ask is, will you be only B2B? My answer is very simple. We will be B2B2B and even B2B2C as well. Right. I'll give a small example. Nure Edge, which is our SaaS product. We are not only selling to enterprises, we are selling to telco as a customer. We are selling to telco's customer as well. So for example, it's B2B2B. So now next is, can we go to B2B2C, which is telco's consumer customer? That's where the real volume hits actually. So these are new age business models which will evolve. And as long as we are able to solve a business problem and monetize it, and to the answer to your question is, it could be mix of everything. As even you spoke about it, whether it's platform plus services, product plus services, or productized services. I don't know whether I answered your question.
Okay. And just to see, we can only gauge from the, rather than the monetization will be into the future. But at this point of time, as we speak, how much of the product R&D team is in place where you can really talk about that this is what man-hours of product development we are developing at this point of time? How much is the team strength on just the R&D?
I'll explain. That's a great question. Great question. I'll go by divisions. Okay, then you'll get a sense of where we are today. Our entire Oracle COE, for example, we invested in our dedicated Oracle COE in Tinnevelly. With all our lateral hires plus all the freshers, we are almost close to 120 people Dheeraj. Okay. This is only focused on Oracle COE, on OCI, on security and Apex, and they're all building capabilities, frameworks, products, and obviously product ideas also come from services projects as well. So then we can build those frameworks, and then we can come up with our own platforms or products as well. So Oracle COE is such a big investment we have. The second big one is the cognitive computing services or the edge computing in IIT Madras. We have almost close to 60 engineers. These are all I call the Einsteins, real high-end folks, data science, analytics, deep learning, AI ML guys, edge computing folks. We have 5G core area guys. So this is almost, real hardcore. We are almost like 60 people working there. Apart from that, even with our AAA or cloud first or most of these areas, if you look at it, we are investing in multiple divisions of build, which is happening. So I'll give you a small example. Even within our AAA division, which is our testing, which is our bread and butter business, we are just releasing our new platform called Flexib Plus. So Flexib Plus is automating testing, and it is also now moving into self-scripting with cognitive technology inside. So that product is being launched right now, Flexib Plus Plus. You had a plus, it's come plus plus. So these are continuous innovations and product development, which is happening in parallel. To your question, we are investing almost this year to the tune of almost 25 crores in terms of capitalization and investments in product building, Dheeraj.
Okay, good. Good. So I think the entire avatar of the company is changing after the deal slump sale. A lot remains to be seen. A lot is in pipeline and WIP from your side. It's not an easy job, but obviously you're trying your best, I hope. Yep. Just one thing on the balance sheet hygiene, we saw some contingent liabilities still standing. Is it still there, about 400 odd crores, even after the debt repayment?
No, I'm not sure because see, all that has been paid off. If you look at our latest one, all that has been paid off. There is no liabilities in our books at all. We are debt free. Because see, that 440 was before that preference shares. All that has been redeemed now. All done. We are debt free. Yep.
And just one related question, because the pricing model of the productization has also changed from license to service, kind of model. It's more of a plug and play kind of a model. So is it going to be in the interest of the business organizations, or the traditional way of license and AMC continues to, which is no longer there? I mean, because there is a lot of disruption happening.
It's a huge change happening, Dhira. I'll just give you a small example, then you'll appreciate the pricing model. I'll give you a small example of a live deal, okay? Then you'll see how the pricing model is changing. We just entered an account with Nure Edge, which is your SASE product, which is typically license-based, but it has multiple features and stuff like that. So end of the day, what happened, which became a product sale or a platform sale, which could be on stuff, became a TCO deal where we are now sitting and trying to figure out how we can eliminate or reduce the cost of cybersecurity operations for our customer. Let's say it's now almost $2 million. We are now saying using our platform, using our product and our services, we can offer it 1.5 million. It's straight away 500K savings and with all the quality parameters. So the deals are all changing in that fashion, Dheeraj, because where product is now becoming the embedded part or the how part of it. It's maybe that's the way you probably deliver the outcome.
Right. Yeah, as long as you are able to pitch and the customer is able to see the cost benefit of the solution that you're providing, I really be keen on it. So great. And
now also see what is happening. The conversation also is moving more and more from the CTO, CIOs to CDOs and COOs as well, and the business side of it. That is the reason why we need to also invest heavily on the domain side, because the pure technology prowess will not help, or even a product prowess will not help, but we need to overlay the industry and the functional knowledge of that, Dheeraj. So that is where the entire, go-to-market is changing.
Right, and you are not constrained to invest in terms of financial
Yeah, absolutely. And we'll see, and for us also, see, necessity is the mother of invention, right? So you come out with alternate models to kind of figure out and do it. And our USP is going to be the speed at which we can move fast. And that is starting to show results because our ability to, orchestrate solutions or bring in like-minded partners. It could be white labeled or whatever it is, but stay focused on solving the customer's end problem. That's starting to pay results.
Great, and all the best to you. I hope 3i 2.0 becomes an even more powerful enterprise going forward. And all the best to you. Thank you, sir.
Thank you, dear. Thank you a lot.
Hello. Hello. Yeah. So, anybody else who would like to ask a question again?
So just some basic finance related question.
Sure, please.
Gansa, you can go ahead with the questions.
Hello, am I audible?
Yeah.
Yeah, now you're audible, please.
This finance related question. Where do we see ourselves revenue wise in the next 1 year, 2 year, and going ahead?
Yeah, so in fact, I don't know. I went ahead and took a bold commitment. It's anyway a public domain statement I made at the start of this year. The outlook I've taken, though it's a very tough challenge, I've taken the challenge, me and my team. We exited around 674 last year. We are targeting 760 crores this year with a 15 crore PBT. That's the task we have set for ourselves. Though it's a big challenge, we will make it happen. And that's where we are heading towards it. And the 3-year goal we set for ourselves is, at least in the start of the year, we set for ourselves to be 1,000 crores, 100 crores. So at least we want to hit that milestone because that's a very, very important milestone for us to kind of, accelerate after that. So that's the short-term to medium-term goals we are targeting.
That's amazing, sir. All the best. All the best.
Thank you. Thank you.
Thank you.
Yeah. Anyone else? I think you should give your closing comments and we should end. I mean, since there are
Thank
no
you, sir.
questions. Yeah.
Yeah. Thanks, Ashmi, for organizing this, and thanks everybody. I think there were fantastic questions, and I really want to thank all of you and seek your support as well. Thanks a lot. Yeah,
Thank you and all the best.
yeah, thank you. Thanks everybody. Bye bye.
Thank you all. Bye.